Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Tepper, retirement expert with Forbes Advisor, a trusted destination for unbiased personal finance advice, news, and reviews to discuss how the market performed on election day. Taylor, it's great to see you as always. Welcome back. And I think despite all the volatility that we saw heading into today, it seems as if the markets are celebrating this one piece of uncertainty that's been removed from the equation.
Yeah, especially compared to 4 years ago when stocks were pretty, or stayed the same pretty much throughout the day, didn't really rise or fall. Today, everyone drank, their happy juice and everyone's feeling really, really good. And so stocks did pretty well. I think what's going on, and as much as you can sort of, read the tea leaves, is that the market expects that Biden will win, and that will help augur in a huge stimulus that Wall Street and Main Street too really, really wants. And so I think they're looking at today as maybe the first day for the rest of their lives when $2 trillion comes running down into their coffers.
Yeah, and I think even outside of what your thoughts are around stimulus, whether it's a Trump or Biden win, you just need some visibility down the road in terms of what this is going to look like, because not even from a stimulus perspective, which of course, on a human level, we want to see that transpire. But even for corporates, it's been really hard for them to give guidance going into the first quarter of 2021 because they don't know what policy is going to look like. We still don't understand what the full impact of COVID-19 is going to be. So I think any sort of uncertainty that's removed from the equation is helpful, but I would imagine that everyone is looking to get focused and just get back on track with some kind of strategy.
Yes, I do think that people can take a breath now and can realize that no matter who wins, a lot of the sort of angst is going to be over. There's going to be some clarity involved if Trump wins and we have a divided Congress, much like it's been the past couple of years. Wall Street businesses know what to expect. There's no real immediate change. They'll probably hammer something out pretty quickly when it comes to relief, but there's not going to be like a huge rise in corporate taxes or something like that. And eventually down the road, in a few years, they'll have to figure out what's going on with the Tax Cut and Jobs Act as that sunsets. But for the immediate future, it's pretty secure. And if Biden wins and he comes in with the Senate, they can expect that taxes may rise, although there'll be obviously a fight over that, but there'll definitely be a big stimulus package involved. And so I completely agree with you. I think people just sort of psychologically need today to be done and over with and get on with the rest of their lives.
I hear you there, but Taylor, let's dive into your wheelhouse here as a retirement expert. Regardless of the ebbs and flows that you see in the market, I mean, that's the normal machinations of how a stock market works. It's impossible to time. So if you're a longer term investor, let's say there is a blip on the radar and we do get, some kind of correction as we work through the transition of power, if that occurs through COVID-19, through job losses, through stimulus, longer term, this could be an opportunity, and it just makes sense to stay invested.
Yes, no matter what happens, no matter what's going on, don't let politics interfere with your long-term plans. Like, politics are very important and they affect a lot of very important aspects of our lives, but they shouldn't impact how you save for retirement. They don't impact how you need to save, 10, 15% of your pay into your 401k. So, a lot of people do get sort of pessimistic if their party loses, or overly optimistic if their party wins. And it can have some sort of long-term effects of how you sort of behave and what you're thinking. And you go to a dinner party and someone says, Biden won and that's going to be terrible for business. You should sell everything and get into gold. Like, you just kind of want to avoid that kind of noise and just sort of stick with what you're doing and your long-term plan. Because when it comes to, being able to save and enjoy this standard of living that you've become used to in your golden years, to be able to do that, you've got to just stay on the course that you're on right now, and you can't be waylaid by noise.
Right. It's really interesting. I had a strategist on our show yesterday, and he had showed us a really interesting chart that if you would have stayed invested since 1932, and of course that lifespan would be quite incredible, right? If you could invest that young, and then here you are, flash forward all those years later. But the point is, if you were to have stayed invested and not try and time the market in terms of recessions and presidential transitions of power, you could have been up nearly 45,000% just by staying invested and staying the course. So I think, I mean, obviously that's an extreme scenario, but there's something to be said about that.
It's the only thing you can do, right? It's the only thing you can do. You, like you're saying before, you do not have the power to time the market, and you're going to sort of lose more money, and you're going to incur a lot more trading costs if you try to. So don't do that. The only thing you can do is try to have a diversified portfolio where you may mitigate some of the losses with a well-balanced, stock and bond asset allocation, and you basically save your money. And once you get closer to retirement and your assets build, then you can sort of hopefully get some capital gains off that. But for a lot of people right now, you just need to keep saving. Just think in terms of saving and not in terms of yield or return when you're trying to motivate yourself, when times are weird or strange like this.
Well, let's wrap it up with some retirement 101, because you had just made a comment about, 10 to 15% of your income should go towards a 401k if that's available to you through your employer. Is that sort of the sweet spot? Do you start at a little bit less of amount when you first get into the workforce? Do you recommend at least doing employer match? What's your recommendation on that?
Yes. So I think you should at least do your employer match. And for younger people, it can be kind of difficult, if you have student loans, if you have to save up for your apartments, all that kind of stuff. So at least do your employer match so you get that free money. And in the meantime, try and slowly build up an emergency savings fund so you have eventually 6 months worth of essential expenses saved in a high yielding savings account that you can get at quickly if you lose your job, and you don't have to withdraw your 401k and incur all kinds of bad stuff. And as you get a little bit more, senior in your career, as you become established and you're feeling good, you can slowly raise that up to 10 and maybe 15%. And that includes any match. So it doesn't have to be all on you. You just want that amount of money saved to help you get to where you want to go. And look, you look at studies, and basically half of Americans are at risk of not being able to enjoy their same standard of living now as they will have in retirement. And, Social Security I think will always be here, and it's never going to go bankrupt. The trust fund may get depleted, but I think politicians will fix that before it happens, next decade. But you don't want to be reliant on Social Security to fund your income, to fund your retirement. You want to pull from as many retirement income options as you have. And so to be able to do that later, you have to save now. So when you're thinking about just getting started, save up to that employer match and slowly build over time. If you can do a thing where it auto escalates, where it increases your savings percentage by about a percentage point each year, that's a really great thing. So you have to think about it. But, that's sort of the 101 about it.
All right, Taylor, great to see you as always. Thanks for joining us on Trade Talks.
Thank you so much. I really appreciate it.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.